Well, Zee Entertainment came out with its numbers yesterday post-market hours, where the profits came in lower by 77% at 93.4 crore rupees, but that was largely on the back of an exceptional loss of 97 crores in the quarter as a provision against the receivables from Siti Networks. The revenues were down about 20% at 1,760 crore rupees, but were pretty much in line with what the street was expecting. Margins though dwindled to about 16.6% versus 30.4% on a year-on-year basis, with the EBITDA dropping by nearly 56% to 292 crore rupees. The other operating revenues as well witnessed a steep decline of about 88.7%, and you did have this time around their ZEE5 platform, which is the OTT platform as well, which saw revenues of about 98.9 crores. Now, the advertising revenues, which is the mainstay for the company, came in lower by 26.3% on a year-on-year basis to 902 crore rupees on account of the weak advertising environment due to the pandemic. You had the domestic subscriptions though, which was flat on a sequential basis, and on a year-on-year basis grew about 10% to 800 crore rupees. This time around, if you look at the numbers closely, it has been a bit disappointing, but on a sequential basis, definitely there has been an improvement in the overall ad revenue growth. The subscription revenues have grown, albeit flat, and you have seen the revenue growth as well that has been healthy, as well as their ZEE5 platform that has been fairly encouraging. We spoke as well with the management then. We spoke to Mr. Rohit Gupta, the CFO, and he is of the view that ad revenues are going to pick up in the next second half of FY21. We will see a recovery by Q3 or Q4. That's largely on the back of the festive season, as well as increased viewership share, and they are seeing an increased viewership share. They're already saying it's higher than the pre-COVID levels. In fact, the management also said that they have seen nearly a 43% increase in their cash levels in March, despite the low revenues. Their overseas investment as well has been completed, and that will come in the next few days. They've seen a growth in their subscribers for their ZEE5 platform as well, and their daily average user is use time is at about 5.2 million. They're now looking at a strategy of content creation, content monetization, and customer acquisition, and believe that this is going to lead to strong bottom line growth as well as a new strategy going forward. Meantime, here's what brokerages have to say about Zee Entertainment. You've got CLSA, which has maintained a buy rating with a target price of 280, saying that the Q2 revenues are ahead of estimates according to them, and that the Zee stock has seen in the last 12 months has been hit very hard, but they believe that growth is set to return rapidly in the second half of FY21.